Xpeng Inc. analysis, the post-IPO analysis of this company. Hello, everybody. My name is David Scheuer. This is StockerFinance. Make sure to follow me on Twitter at StockerFinance for more information. So what is Xpeng Inc.? Let's go ahead and just quickly describe what this company is in case you haven't heard of it, and then we'll dive into the full IPO analysis. So it's an electric vehicle maker located in China. It plans to compete with NIO and Tesla, who are both electric vehicle companies as well. It's currently backed by the Chinese company Alibaba, which is a huge, it's basically the Amazon of China. And so it has some really substantial backing there. Its ticker symbol is XPEV, and it's listed on the New York Stock Exchange. And its big advantage to, other electric vehicle makers that it offers electric vehicles at very cheap prices. And you can see that in the pricing here. So its prices range from $21,000 to around $43,000, whilst Tesla's prices are significantly higher than that at $31,000 to even, over $100,000 for a vehicle. And that's with savings as well. So, the prices that Xpeng is offering are very intriguing to follow here. And if you look at their vehicles, you're going to notice it's pretty much a copycat of Tesla. Very similar looking vehicles. The interior is very similar looking as well. Now, the images on the right are slightly different, but the ones on the left are surely almost exactly like Tesla's. And then it's kind of ticked a lot of, I guess Tesla shareholders and Tesla fans off. However, there's an argument to be made that, more competition, more people producing electric vehicles is just good for the world in general. And I don't see this company, wiping out Tesla or being a Tesla killer whatsoever. We're going to talk about sort of that, Tesla competition in a second here. Now, if we look at the IPO summary before it went public, it was to sell around 429.8 million Class B ordinary shares. It put a placeholder number of 100 million as it's expected to raise in the IPO, but it raised significantly more than that. It raised around 400 million from Alibaba as well as other wealth funds ahead of the filing. And according to Crunchbase, it raised over 2.6 billion in Series C funding. It originally planned to float 85 million ADS shares. Now, in my last video, I already went over this. So let's see what has changed since it's gone public. Well, it actually raised 1.5 billion from its IPO. It increased its float to 99.7 million shares. What float means is just simply shares that you're able to buy and sell in the liquid market. The outstanding shares can be significantly higher than that, but that includes restricted shares that aren't, out there on the open market. You can just buy and sell through a brokerage, for example. Now, because of this, the price per ADS, which is an American depository share, increased to $15, and it was originally around $11 to $13. Now, my estimate here was pretty on the dot. I thought it was going to be between $10 and $20, so I'm kind of proud of that. However, it actually is significantly above that now, even trading at around $22 a share. Now, if we compare this to NIO as well as Lee Auto Inc., who, Lee Auto Inc. went public about last month. NIO went public with its IPO in 2018. Now, NIO raised $1 billion and Lee Auto just raised $1.1 billion. So, XPEV, it raised more than both of these companies at $1.5 billion, which is very impressive and a very successful IPO for this company. But is its valuation too high? There is a lot of questions to be asked about this company before we consider making an investment. Now, if we go ahead and just look at the chart, you can tell it's trading around $22. The price pretty much all day. There's no massive surge like we really saw with, Nikola. However, we'll see as the days go on. And if we go ahead and look at the current valuation of $22 a share, just so you know, each ADS represents 2 Class A ordinary shares. So the 99.7 million that I talked about, that equals to 199.4 million Class A ordinary shares, since we're multiplying that by 2. If we multiply the total or Class A ordinary shares of 199.4 million times $22 a share, which is currently trading at, we get a $4.386 billion market cap. Now, that seems extremely high, but we're going to see if that really is too high or if it's maybe, kind of normal or undervalued. Let's find out. Now, the thing is, as I just asked, it's really tricky to figure this out, but we can do some math and we can do some comparison as well. Now, if we just do some simply liquidation value math here, we just multiply its total assets, we minus its total liabilities, and we divide it by the shares outstanding. At least all the shares that are available in float is what I'm doing this calculation based off of. So if we do that calculation, we get a price of $4 and around 35 cents a share. That's significantly below the $22 a share that XPEV is trading at. Now that's expected. I don't think anyone expects this company to be a value investment. It's an EV maker that's not yet profitable that just went public. So it's not surprising at all. But is it, an undervalued company, a little value investment? No, definitely not. And I don't think that's a surprise to anyone. This is also the number that I'm showing here is also not including quite a bit of data, including the cash raised from the IPO. Now let's go ahead and look at growth. And what we're going to look at what we're going to look at here, if I can get to it. Oh, there we go. What we're going to look at is the growth between revenue, cost of sales, operating expenses as well. Now, looking at this chart here, you can make some simple comparisons just by comparing the numbers. But what you'll notice is on the right here, we're only halfway through 2020. Now, as of this, we're a little more than halfway as of right now, but when this chart was put out. So in order to compare this to the year ended for 2019, 2018, I'm going to simply double the numbers on the right. Now that means over the course of this year, they could change drastically. So this, these calculations aren't totally accurate, but it does give us somewhat of an idea, at least with the limited, numbers and data that we currently have. Because remember, this company hasn't released or hasn't had a quarterly earnings report yet. It's really we only can deal with the numbers that we have available, which is on the F1 form, which was, they released the F1 form before it goes public. So just know that that's what we're dealing with right now in terms of information. Now, if we go ahead and look at this and we do a quick balance sheet analysis, we see what's growing, what's shrinking, etc. If we compare the 2020 number to, which we doubled again to make it a full year, compared to the 2018 number, that's 96.5% growth. That's very good revenue growth that you'd like to see in a company. However, if we compare this number to the 2019 number, well, it's minus 15% total revenue, which is definitely not what you want to see. However, it comes to a different story when you look at gross loss. Now, if we compare the gross loss from 2018 to 2020, it increased by 76%. And the reason I have that highlighted in red, because that's a bad thing, and if it's highlighted in green, it's a good thing. I just don't want the numbers coloring to get too confusing there. But if we look at the gross loss compared to 2019 from 2020, well, that decreased to 672.69%. That's really good that the loss decreased that much. Now, total revenue also decreased, but the fact that total revenue decreased and gross loss decreased by that substantial amount is a great sign for this company. Now, operating expenses increased substantially compared to 2018. My guess is because they're simply growing, expanding, doing a bunch of different things with the cash that they've raised. And if we compare that to 2019 to 2020, well, it decreased 13%. So their operating expenses decreased and their gross loss decreased substantially. Now remember, 2020 is not up yet. This number 6 is the 2020 numbers that we're dealing with here is simply the 6-month numbers times 2. So they're not super accurate. And, this year is very different than the past years. It's a very unique year to say the least, and it's not complete yet. So once the year is complete, once they come up with more, earnings reports, etc., and we get more information, we can definitely make a more detailed approach and more accurate analysis of this company's balance sheet. On top of that, they've also raised a considerable amount of cash since June 30th. Just a heads up, these numbers are in thousands of US dollars if you haven't figured that out, by the way. All right, so now XPEV, is it overvalued or undervalued? Again, this is super tricky to figure out. And after, doing some math and comparison, it's really hard to give an answer. But how does it compare to other electric vehicle companies? Well, one quick comparison we can make with Nikola, Lucid Motors, Rivian, etc., is that it's actually delivered vehicles, and it's earning revenue. It's got numbers on the balance sheet, which you like to see. Unlike Nikola, which basically is it's a really odd situation of a company there. And if we're going to check out its valuation in a second or what it's currently worth. On top of that, EV and tech stocks have extremely high PE ratios. Tesla's is over 1,000, over 1,000 PE ratio. Investors in these types of companies are really forward-looking. Does that mean the price that they're currently trading at means there is Does that mean Tesla is, necessarily overvalued? Well, from a fundamental standpoint, yes, but its investors, including myself, are looking very long-term at this company. We're pricing in a lot of the future growth that is expected to come. So I think Xpeng Inc. is going to experience that same type of thing. In fact, if it's, doesn't have an extremely high PE ratio, it may be, I think the valuation is somewhat justifiable is what I'm saying. When you compare it to other EVs companies' valuations. However, that means that if it doesn't meet or beat analyst expectations, the stock could take a big dump because it is fundamentally overvalued. So I hope that made sense. I know that was really kind of a tricky, weird way to describe it. Anyways, if we look at Tesla's, PE ratio, it's 1,152, which is insane. We look at Lee Auto, it has a market cap of 16 billion. NIO has a market cap of 23 billion. Nikola has a market cap of 14 billion, almost 15 billion. They haven't delivered a single vehicle. That's insane. So for XPEV to have this, pretty high valuation right out of the gate here is not that surprising to me, and I don't think it's that necessarily a bad thing. However, does that mean it's a safe investment? Doesn't it mean I'm dumping my money in it? No, not at all. It's still fundamentally undervalued, and they still have a lot to prove. And to be honest with you, I just want more information. I want to see a quarterly earnings report. I want to see that their revenue continues to grow, their operating expenses continue to decrease, and I want to see a clear path to profitability. I want to see a lot of changes and growth with this company before I consider making a serious investment whatsoever in this type of company. For me, it's just not worth the risk of something happening. So now let's talk about the Tesla competitor / killer, argument going on here. Now, is Xpeng really a Tesla killer? No, I have killer crossed out for a reason. It's not a Tesla killer by any means. However, every great company are going to have copycats that follow, and some of these copycats will be very successful. So take Apple, for example. Apple released the iPhone, and it's still around today, and it's had a market cap over $2 trillion today, which it just passed recently, despite having lots of other companies make pretty much exactly the same product. Tons of companies now make phones that are touchscreens that have apps, sort of Apple-like stores. Apple has lots of competitors who I would say are, copycat companies. And is that necessarily a bad thing? No. In fact, Apple has, it's become this gold standard for phones. I think a lot of people can make that argument. So investing in competitors, however, can help you hedge your investment. If one happens to better than the other, you profit either way. If Tesla is, let's take Tesla and Xpeng, for example. So Xpeng and Tesla, they are technically competitors since they're operating in the same space. Now, Xpeng is definitely, copying Tesla in terms of, the looks of its vehicles and a lot of that stuff, which they have been criticized. Now, my view on this is that Xpeng is further helping the transition to electric vehicles. So either way, it's good. On top of that, Tesla has so much demand and has been, just leading and charging the way for electric vehicles that a small competitor like Xpeng is not going to take it out by any means. However, Xpeng may, if it continues to grow and do well, it could be a very successful, copycat sort of company to Tesla. So by investing in both, if Xpeng was to come out with some crazy technology, or if it was to actually be a substantial competitor to Tesla, we're going to profit greatly off that. But as Tesla continues to grow, we're also going to profit greatly at that. So it's a sort of a way to hedge your investment a little bit in one of these companies. Again, though, I'm not personally making an investment in Xpeng. In fact, has my opinion changed from the last video? Now, in the last video, my opinion on this company was it's questionable, but an interesting company to follow. Now, I'm going to upgrade that after this IPO to it's intriguing, but still just an interesting company to follow. It's legitimate, it's producing vehicles, delivering vehicles as well, it's innovating, and it has lots and lots of cash on hand now, especially after this IPO raising 1.5 billion. Apparently raised a bunch of other cash from, more private groups, equity funds, etc. However, we're still dealing with a lot of government regulation. It's not yet profitable. We need more information about its balance sheet, the numbers, what's going on. Is it growing? Is it not? It's really hard to tell with just one F1 form and just the limited information that it's provided us. On top of that, we're dealing with a lot of US versus China tensions right now, and just China tensions throughout the world, not just with the US, but we're seeing it with Australia. We're seeing it with India, as well as other countries as well. It has a very, it does have a high valuation. It's not fundamentally undervalued whatsoever. And we also don't know their plan for how they're going to spend a lot of this cash. Now, I'm sure they might have said it somewhere in their F1 filing, but I have not seen a very clear path besides just general, we're going to innovate, we're going to try and grow the company. I want specific details. I just want more information before considering this as a serious investment. Anyways, I hope you enjoyed this video. Thanks for watching. Please subscribe. Sorry if this video was a little rambly. I recorded it pretty late at night right now. Check out these videos as well and follow me on Twitter at StockerFinance for more information. Comment below what you think of this company as well as what you think of the current valuation for this company after it has gone public. It's going to be really interesting to follow this company as well. There are other EV companies in the space as they continue to grow and compete with each other. Just a super interesting sector to follow, and I'll definitely be making more videos on similar companies. I have videos coming out every Monday, Wednesday, Friday. Subscribe, hit the bell notification so you don't miss out on those. They're gonna be good ones. Anyways, this is StockerFinance. I'm your host, David Scheuer. I'll see you guys in the next video. Peace out.